welcome to Leaders of Tomorrow, the only show on Indian television where you, the MSME, get center stage. This is ET Now's special daily initiative to give MSMEs and entrepreneurs the opportunity to be front and center on every industry and area that matters to you. We're counting down to the budget tonight here on the Leaders of Tomorrow, and I have two experts with me to tell you, the MSME, what some of the things you could possibly look forward to are. First up, let me introduce Himanshu Parekh. He is Partner International Tax at KPMG. And second, tonight we have Akshay Kenkre, Partner at Transprice. Gentlemen, thank you so much, both of you, for taking the time out to talk to our viewers about what they should keep in mind ahead of the budget. What are some of the crucial things perhaps that's going to change life for them, good or bad? Let's start with the big picture. We've seen a lot of things that have changed over the last 1 year, whether it's the big one, GST, finally coming into industry, demonetization had some bit of an impact, insolvency and bankruptcy code for companies, that's also been a big talking point, has had an impact. So maybe the sum total of all these changes that we've really seen in the lead up to the budget. And let me start with you, Himanshu.
Yeah, as you rightly pointed out, there have been a hell lot of developments which we've seen over the last couple of years, be it GST, be it Ind AS, be it demonetization, so on and so forth. And there are a hell lot of expectations as far as taxpayers are concerned from this budget, especially since this is going to be the last budget, the last full budget of the Modi government. And if I was to talk about the expectations of the MSME sector, and we broadly divide the expectations both on the direct tax front and the indirect tax front. The first thing I may want to talk about is about the expectation as far as the corporate tax rate is concerned.
Just before we come to that, I want to talk the big picture to say, yes, is it unprecedented that we've seen so many changes? And are we likely to see any, a lot of changes, not too many changes, good budget, bad budget, bullish, bearish? What is the expectation?
So indeed, there have been too many changes which have happened in India over the last 2 years. And if you look at what has happened in India over the last 10 years and compare that with whatever has happened in the last 2 years, you may come to a conclusion that a lot more has happened since the last 2 years. Several reforms on several fronts. I think it is now time for government to take stock of all the reform measures they've taken, consolidate its thought process in terms of what needs to be done. So rather than coming out with new reforms, the thought process should be to focus on the existing reforms and ensure that we progress on the path of development going forward.
Would you agree?
Yes, I agree to it. In fact, it's not only India, it's globally that since 2013, there have been a lot of reforms which are made on a transparency level for the entire world at large, especially from a taxation perspective. Yes, so I completely agree to him in terms of where India is going, what it is going to offer to a global platform. Yes. All
right. So you were talking about corporate tax. Let's come back to that. The expectation last budget was that it would possibly, go down to 20%. That didn't happen. 25% happened from 30%. Are we likely to see then a further reduction this time around? And how much of a benefit will that really be for the viewers of our show? What would you like to tell them?
So in fact, in 2015, as government committed, there was going to be a reduction or phased out reduction completely in the corporate rate tax, which we saw in 2017 budget, that for certain companies below 50 crores of turnover, there has been a reduction of corporate rate tax directly to 25%. While I expect in this time, maybe it applies to all the companies at large and also to firms, LLPs and everybody. So I'm looking at maybe a reduction of corporate rate tax at 25%. And let's talk about globe. I mean, USA has now proposed and reduced its corporate rate tax to 21%. If you talk of UK, it is 20%. If you talk of Singapore, it is 17%. If you talk of China, it is 25%. So all the major economies of the world are hovering around that 20-25% range. And I think this corporate rate tax would be quite competitive in terms of offering itself to the world as an investment destination. Having said that, I think the surcharge and education cess, which always gets on the top of corporate tax rates, needs to go, because that is not really acting as a revenue collector and it's just increasing the effective tax rate of every corporate, maybe say from 25% to 27%. But why to do that? Let's stick to one rate and let us do away with surcharge and education cess. So one corporate tax rate, 25%, which is there right now for some companies, should apply to all.
All right. So one thing that I do want to talk about at this point is minimum alternate tax, MAT. We've been speaking about it for a long time now. Are we likely to see any changes in this budget? What do you gentlemen expect? And maybe, the significance really of any changes we are likely to see.
So basically, if we talk of the corporate tax rate reduction, the other side to corporate rate tax reduction is doing away with the exemptions that currently various industries enjoy. So when exemptions go away,
you're talking about a withdrawal of SOPs?
Yes, I'm talking of withdrawal of SOPs or withdrawal of exemptions, or maybe nowadays there is already a sunset clause, and many sunset clauses are getting over at 2017, 2018. So post that, your book profits, which is relevant for MAT, and your tax profits, which is relevant for your tax books, almost would be more or less equal, because there won't be so many SOPs around. So why to have a MAT at all? I mean, you can easily phase it out from an economic perspective. You phase out the MAT, first take the MAT right from the current levels to 10%, and maybe from next to next year do away with MAT. So there won't be any requirement of MAT in India when you move towards 25%, and your effective tax rate again would hover around 25%. What used to happen is there are certain startups, IT companies, which may not be paying tax when to start with, because they're having losses in tax books, but still they have to pay MAT, and somehow, of course, there is a carry forward of MAT being taken care of. But I think there won't be any relevance of MAT with reduction in corporate rate tax to 20 or 25%.
Himanshu, why do you think that we haven't been able to effect any changes in MAT for a period of a couple of years? That's always been doing the rounds.
If you look at the very intention of introducing MAT as a provision, what used to happen is there used to be a lot of companies which used to make significant profits, which used to be disclosed to their shareholders, but because of income tax incentives or exemptions, the tax profits were significantly lower than book profits, and such companies used to declare huge amount of dividends to their shareholders without paying any tax liability. And as he pointed out, now with all the exemptions and deductions going away, it is now the right time for a complete or partial withdrawal of MAT.
Okay, you were just talking about IT companies. I just want to extend that and also talk about startups. While, for instance, e-commerce last year was finally recognized as an industry, was brought under GST, etc. I want to talk about the ease of entry and exit for startups when it comes to angel funds or when it comes to PE. Angel funds, of course, a lot of criticism that we hear. It's difficult for angels when they want to exit. They find it difficult. But there's also you were telling me earlier about the problems associated with just entry in terms of taxation for angel investors.
Yes, so, we have a provision in the income tax law which is known as section 56 to 7B. What that provision provides for is that wherever a company issues shares to a resident shareholder, and if such shares are issued at a premium, if the issue price exceeds the fair market value of the shares, then the difference between the issue price and the FMV of the shares becomes taxable in the hands of the company. And now this acts as a big deterrent. This acts as a big deterrent to startup companies and especially angel investors who make investments into the companies.
Himanshu, this is particularly a section which was brought in because if there are two third parties interacting with each other, right, they will always interact at a fair market value. If you are doing something above a fair market value, which means it's assumed that that additional amount is coming out of a black money or a secondary market. Okay. So that's not the money which is actually in the economy. So you're trying to make white out of black. So this is what was the logic of bringing 56 to 7B. While I completely respect, it is acting as a deterrent to various startups. Other way around, we could do is maybe we can look at investing in LLPs, because this section doesn't apply to LLPs. So if you start investing as a startup in LLPs, even the LLP regulation would somehow make a lot of sense for all the startups, right? But
do you think this could possibly be high up on the government's priority list?
This demand has been long made by the industry, and what we hear is that the government has been listening to it with loud and clear ears, and therefore hopefully they'll meet this demand of the industry and do away with this provision, or at least provide some kind of relief or relaxation to investments by angel investors into startup companies.
Basically a double-edged sword. I mean, we have to have a very tightrope walking here from a government perspective also. It's not an easy question to solve, and there could be arguments made from both the sides. So it has to be a very balanced one.
All right, we'll take a very quick break on that note, but we are going to continue talking about budget expectations on the other side. Just stay tuned. Welcome back with us here on Leaders of Tomorrow, and tonight we're continuing our focus on budget expectations for you, the MSME entrepreneur. Let's also talk about personal taxation at this point. The expectation, as always, is that you could possibly see some cut when it comes to the personal tax slabs. I want both of you gentlemen to give me your opinion in terms of what could possibly happen, and if that happens, this is going to be good for the economy, because then you would see, more money possibly coming back into the economy.
So this is the last budget for this particular government in the 5-year term. So I expect this to be a popular budget. However, there are two agendas here. First, you want to give a relief, and you would also like to bring as many number of peoples in the population of getting covered in taxes. So you want to widen the tax base. So what you could effectively do is, you can increase the basic slab rate which is there for individuals from 2.5 lakhs to say 3 to 3.5 lakhs. And the higher tax rate you can put is, you can put after 10 lakhs. Till 10 lakhs, give them a leeway of getting taxed only at the rate of 5%. Again, no surcharge and no education cess. So only taxed at 5%. There would be many people who would join the bandwagon and they get into the tax net, because till 10 lakhs, I mean, most of us now would be earning 10 lakhs with IT companies coming in. If they are able to pay taxes at 5% itself, why would they not get into a tax bracket? So increase the tax bracket by putting more people in, give them ESOPs.
Okay, so on one hand you're saying it's going to be a popular budget, and on the other you were saying that the government could and should possibly look at doing away with a lot of SOPs. So in the middle of these two, where do you think is it finally going to sit? Is it going to be a very popular budget, mildly popular, not so popular?
From my perspective, I think it would be a popular budget, mainly because from a corporate tax perspective, the corporate side, I'm asking to reduce the SOPs. But from an individual perspective, I'm saying increase a bit of SOPs so that many people can get into the tax bracket. And yeah, that's basically. So I'm trying to create a divide between the individuals and the corporates and look at them differently, while give benefits to individual, take some benefits from corporates and lower the tax rate. Make tax simple, because that's how you will go up in ease of business ranking.
Okay, talking of simple, the government has definitely tried to simplify the entire taxation process through GST. One state, one tax. Post GST, this is the first budget we're going to see. Do you think that pretty much everything that needed to be addressed, the big picture as far as GST has been addressed? We've seen, for example, we were talking about SOPs, the textile industry. The government has announced that, there's going to be fewer slabs there. They're still working on a few kinks, if I can call it that. But do you think most of the commentary has been sort of, we've heard most of it from the government then?
So indeed, a lot has happened since GST has been introduced since the month of July. There used to be a lot of teething problems and glitches which we used to face in terms of uploading of the tax returns, or in terms of the entire IT infrastructure setup that we have. In terms of the high rates of taxes, there was a huge demand from several industry players to say that the rates of tax need to be reduced. And the government has been doing all and more to address most of these concerns. So we've seen a significant reduction of tax rate for various items. The first reduction applied to 180 commodities, and very recently there were several more commodities in which case the rates have been further reduced. So that's something which the government has done well to address. What the government now needs to focus on is on the woes of smaller taxpayers. So the aspect of uploading of tax return still continues to be a nightmare for smaller taxpayers. And if you are operating in more than one state, you need to file tax returns in each and every state every month. And the demand has been to ensure that there could either be a centralized registration, or instead of filing monthly returns, let a leeway be given to taxpayers to upload returns every quarter. And rather than having so many multiple returns, if it can be ensured that a single return be uploaded by a taxpayer, that will be a very, very welcome suggestion or a provision from the governments. That's something. The other demand of the industry has been vis-a-vis the entire composition scheme. So today we have a composition scheme which provides that as far as small taxpayers are concerned, having an annual turnover not exceeding rupees 1.5 crores, they need to pay GST at a flat rate of 1%. But this scheme is not available to taxpayers who are in the business of supply of their commodities or goods through e-commerce platforms, or who are involved in interstate supply of goods. And therefore, the need of the hour is to extend the composition scheme even to such taxpayers. Again, as far as small-time retailers are concerned, their demand has been to allow them to have a simplified invoice, which can be submitted by them rather than having a very, very complicated and a detailed invoice. So these are some of the things which I thought the government can do well to address the concerns of the industry.
Do you have also a wish list then in terms of the GST commentary we have seen for the government?
So I think GST as such, as I expected, there should have been some teethering issues, and there are some teethering issues, and that would have been expected by anybody. The GST Council is doing its job at this point of time, and they are coming out with certain amendments, and at least they are listening to the voice of public. Now, yesterday I was in some seminar and I heard in US there are 3 income tax returns that you need to file. So which is at the federal level, the state level, and also at the local level. So when you want to have higher level of transparency, a higher level of input credit mechanism, and a seamless input credit mechanism to reduce the tax pain from an indirect tax perspective also and loss, I think it's important from somewhere to have a compliance mechanism which would definitely impact the MSME and the larger industry, but over a period of time it will settle down. It will settle down how it happened with the TDS systems right back in 1995. I mean, this is a time when we are looking at reframing and reforming the entire indirect tax regime. Yeah. So as TDS settle down, GST will settle down in few years. Okay. So I completely respect what Himanshu has said. I completely understand from where he's coming, but it's also important to understand and to voice out the other side of the GST compliance.
You're saying transparency, and most banks tell us that's one thing that small businesses definitely need to do, make the books transparent. Yeah. But I want to talk about something that's perhaps not directly related to the taxation, but is very critical for small businesses, and that's this talent availability, and that's job creation. Do you think that also is perhaps something government could look at? In the past, they have of course come out with Skill India. They're trying to improve the quality of talent available. But as far as the budget commentary is concerned, anything we could hear?
Yes, very much. We do have a provision in the income tax law, which is known as Section 80JJAA, which provides an incentive for taxpayers to recruit new employees. Essentially, what the provision says is that if you recruit a new employee, then 30% of the compensation or remuneration that you pay to the employee will be available as an additional deduction for a period of 3 years.
Himanshu, but I think that's a very specific provision that we are talking of. But when we are talking of a job creation, yes, what I would like to specify here is, if you are able to give back and put some money back in the pockets of young entrepreneurs, individuals, they will be spending more, they will be saving more, and that would in turn result into an indirect job creation, because that will boost the economy. So don't take the money in taxes, put it in your pocket of the government, and then government builds up development and give ESOPs. What you do is you give that money back to the individuals, so that the individual would like to save and spend to create more jobs.
And that will also benefit the economy, definitely.
That would benefit the economy. So that's a larger picture of job creation.
All right, so we're running out of time on this budget, and we're all of course keenly waiting to see what the finance minister is finally going to announce. But MSMEs are very crucial for the backbone of any country. That's the reason the Leaders of Tomorrow does the show that it does. 36 million MSMEs. You are saying it is going to be a popular budget, but there is clearly going to be, keeping in mind the global concerns, keeping in mind what's happening in the Indian economy, there has to be a balancing act. Let me close with comments starting with you first, Himanshu. Where do you think that line is going to lie?
I fully agree with you that this sector is extremely important and the backbone of the economy, and it would do really well if the FM can address some of the concerns that we have discussed and give some more SOPs and incentives to the industry. But as you rightly said, the FM will need to do a fine balancing act on the one hand to provide incentives to the taxpayers, and on the other hand also ensure that the fiscal deficit is contained within limits.
Sure.
So, Sunanda, while I close, I would like to give certain statistics around MSME industry. In India specifically, MSME accounts for and creates around 25% of employment. It accounts for around 40% of industrial output, and it accounts for 45% of exports. So that itself shows how important this segment of industry is, and within MNC there are other industries in it. So there has to be certainly some amount of softs which should be given to MSME industries, along with if corporate trade tax reduction could be done, that would be great for them. So we should always keep in mind that the backbone of Indian economy and industry, whether you can talk about Make in India or Skill India, is going to be MSME, and I mean the voice of MSME should be heard.
Gentlemen, thank you very much for your time tonight. So our experts are saying that it's going to be a popular budget, but it's definitely going to be a balancing act for the Finance Minister this budget season. If you have any feedback on the show, please do write in. leadersoftomorrowtimesgroup.com is our email ID. On Twitter, tweet at me personally at Sunanda_J or LOT_ET now. You can also leave your comments for us on our Facebook page, Leaders of Tomorrow on ET now. You can call us otherwise on that number you see on your screen. We love hearing from you, and here's counting down to Budget 2018. Thank you so much for watching. Good night.